Ladies and gentlemen, good day and welcome to the Cochin Shipyard Ltd Q4 FY21 earnings conference call hosted by Valorem Advisors and PR Partners Passion4 Communications. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you and over to you, sir.
Good afternoon, everyone, and a warm welcome to you all. My name is Anuj Sonpal from Valorem Advisors. On behalf of the company, I would like to thank you all for participating in the earnings conference call of Cochin Shipyard for the fourth quarter and full year financial year ended 2021. Before we begin, I would like to mention a short cautionary statement. Some of the statements made in today's earnings conference call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. I would now like to introduce you to the management participating with us in today's earnings conference call and give it over to them for opening remarks. We have with us Mr. Madhu S. Nair, Chairman and Managing Director, Mr. V.J. Jose, Director Finance, Mr. Srijit K.N., Chief General Manager, Ship Repair, Mr. Shivaram Narayana Swamy, General Manager Business Development Shipbuilding, Mr. Shibu John, Deputy General Manager of Finance, and Mr. Shyam Kamal, Company Secretary. Without any further delay, I request Mr. Madhu Nair to give his opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. First of all, let me convey warm regards from Cochin Shipyard Ltd. I'm Madhu Nair here, CMD Cochin Shipyard, and thanks for taking your time to be with us today. I presume most of you would have seen the short presentation which we uploaded, which gives a brief of what's happening in the company and about the financials. As you are all aware, we've gone through a very difficult phase. In fact, things are not yet back to normal. So this has been a difficult year for us, to put it that way. In fact, things were generally going well, and that's when the lockdowns came in last year. The company had to lock down, but then at the earliest possible, we could recover back. We tried to see what best we could actually do. And as they say, every dark cloud has a silver lining. What we actually did within those most difficult part was we started working in 2 ships and thereby exploiting the company much better, the company's infrastructure much better. And last 30 years, Cochin Shipyard has not worked in 2 shifts. We have been actually working in a single shift with extended hours and a night shift predominantly for contract work. But after the lockdown and when we opened, we saw that because of social distancing norms, there was no other way but for us to actually move into this particular mode, which was a bit uncomfortable for people because of logistical reasons. But then these days, we started working from 7 in the morning till 10 in the night in 2 shifts with a little bit of an overlap. So to that extent, a difficult period has been converted into a bit of an opportunity, and then the entire workforce also was with us in this. As we move forward, to give you a quick glimpse of what happened, Q1 of last year was practically a washout. You would have seen the results. Ship repair could do very, very little, and shipbuilding also couldn't do much. Q2, it was back to sort of recovery mode. But Q3 and Q4, I thought we could come back much better, and we could handle things. The only catch in Q3 and Q4 was essentially, as we moved forward, there were some projects, especially in shipbuilding, which missed milestones because we still needed some foreign OEMs to come in, and because of second wave which was going through Europe, the travel from especially from West Europe, some of the key people couldn't come in. So that was a disappointment. But from a turnover point of view, from a work point of view, which we could actually move forward despite missing milestones, especially a critical milestone on the aircraft carrier, where we were practically ready to go to sea early into this financial year. But as we are speaking, we have not been able to do that. We are still missing it. And certain other projects, the milestones could not be achieved. But despite the difficulties, what best possible on the work front has been done, keeping safety of people in mind. It's a fact that we have had a number of cases in the company turning COVID positive, but being most of them being in Kerala, the treatment has been good and things have been generally handled well. So as we are speaking, touch wood, things have generally been good, except one unfortunate fatality. So this is where we were on the COVID and the people front. Coming to the capex projects, you are aware that we are implementing two large projects. There's a new dry dock being implemented, and there's a new ISRF project. And unfortunately, both have got severely hit because there have been significant migrant labor on both the projects. The dry dock is being implemented as a turnkey project by Larsen & Toubro, and the ISRF project is being implemented by Simplex Infrastructure. So both had the labor issues. In addition, on the ISRF project, Simplex Infrastructure have also had some financial difficulties, which has actually led to both the project suffering. I think, in my personal opinion, it's been a fairly strong setback on both the infra projects. Our new subsidiary in Kolkata, Hooghly Cochin Shipyard Ltd, we could move forward despite all the difficulties in Kolkata and the Amphan cyclone also. We could move forward. We actually got the people to stay within the campus, and we could move forward with the work. As we are speaking, we are pretty close to start of work in that facility in Kolkata. In the meantime, you are also aware that Tebma Shipyards Limited in Malpe in Karnataka, we are taken over, and Malpe facility is also getting refurbished, and we are hoping to start work as early as next month. Where we are currently, I'll just touch upon that and then get into the financials, but where we are currently, like this year again, continuing what we thought we did good work in Q4, like we have moved on to Q1 of this year, and work has really picked up, but that's when on 8th of May we had to shut down. But then we started working from 31st onwards in part mode. So as we are speaking today in the company, we are almost 55% of people are working in the company. Generally okay, but shipbuilding we need to push forward a bit more. So that's generally on the physical part. And during the meantime, like what all happened and what didn't happen, as I said, aircraft carrier, the final sea trials has not happened as of now. I'll explain. We are very close to getting into the sea trial mode, which is a big event, which will be a big event for the country and for the project, and we are very close. So you'll get these announcements coming in very shortly on the aircraft carrier project. We were building a vessel for the defense research. Practically that vessel is completed, but the vessel has not been able to go to sea because we are missing a few OEM engineers who had to come from Norway, and it's again round the corner, that kind of a thing, because it's just the trials that's remaining on that ship. In the meantime, like the vessels we are building for the Jindal group, the 4 mini bulk carriers, We proceeded with the work. There was disruptions. Jindals also faced difficulties in positioning crew and others. But as you are speaking, the first vessel has been delivered even during this lockdown period and sailed off from Cochin Shipyard. And the second vessel is ready to go for sea trials. Actually, as we are speaking, the vessel could go for sea trials as early as tomorrow. We have had this project for the Cochin Metro, which has suffered because of COVID. Again, import of certain critical resins, because it's an FRP boat, that has actually suffered. Also, this stranding in Suez has led to a little bit of difficulty over there. But again, the first vessel of those project also, next month we are starting deliveries of that vessel. So we have moved forward. So ship repair, we have come back strongly. There are projects, there are a fair bit of projects, and we have won some good naval projects also again this year. There's a large tanker project which we have won, and that project is expected to start next month. She'll be reaching Cochin Shipyard. So ship repair, we are seeing generally good traction these days. Coming to the financials, you would have had a glimpse of the financials for Q4 and the full year. I thought under the circumstances, Q4 has been good from all points of view, from turnover and profitability point of view. In fact, profitability is to put it mildly, it's a little bit too good. That's specifically because the aircraft carrier is actually in a stage, and significant part of the turnover came from the aircraft carrier, and that too from a part of the work which has got higher profitability in it. That's why there's a significant EBITDA margin of 30% in Q4, which I want to caution that's not standard. That is actually too good to believe. So that kind of a margin is there. And on the overall year, we have clocked 2,818 crores on the turnover. I think we aimed a little bit better. We did not touch it, as you are aware. Difficulties because of COVID. You plan for something and the last minute something doesn't happen. People couldn't travel from even interstate and other things. So it was sort of hand to mouth movement. But till the end, we tried to bat well, and you can see from the Q4 we actually batted, but overall a tad disappointing. But then 2,818 crore is the turnover, and but as I said, since the profitability was coming from the aircraft carrier commissioning and trial phase, which is a little bit of a higher profitability figure part, the PAT margins are good, and the overall PAT figure has not come down as commensurate with the turnover. That is the overall picture here. So this is the current situation here, and if I may, before I conclude, if I may touch on how are we looking into the future. We are all generally good. This second wave is a deep disappointment for us because we had sort of everything coming back under control. The aircraft carrier, people are in high morale over there. People are gunning to go out to sea. The Navy is fully involved. I can't name the exact details, but there are certain things which are done pretty close to sea trial work. You put in more than 400, 500 people on the ship, and they work like a unison drill. All those things happened on the vessel. So it was at that level. And then we had to call it off. So I just wanted to convey that we are pretty close to going out for sea trials on the aircraft carrier. And that project will move forward with a potential target delivery date, which is early part of next year, early part of 2022. The other project, the technology demonstration vessel for the DRDO, will get delivered shortly. The Jindal vessels, the second vessel, will undergo trials and will get delivered shortly. The KMRL projects, as I said, the first vessel will get into delivery mode next month, and thereafter By end of this year, we expect another 6 or 7 vessels to be delivered by end of this year, and that will continue. By that time, the KMRL vessels also will get, the Jindal's third and fourth vessel will also get delivered. I forgot to I mentioned, we are building these 4 vessels for Andaman Nicobar administration, out of which the first vessel has been delivered. It's reached Port Blair. The second vessel is going good. End of this calendar year, we should have the delivery of the second vessel. Third and the fourth vessel are larger vessels. There could be some changes happening on that vessel, which I'm not fully privy to disclose at this stage, but then those vessels could undergo a functional change, at least one of those vessels, and could play different role for a different agency within the government. That's all I can convey at this stage. You'll have to pardon me for that. But then it's been built it was been contracted as a 1,200 passenger cargo vessel. So it may undergo a certain change in its function for yet another central government entity. We'll keep you posted the moment we are in a position to convey things clearly on that project. So all in all, the shipbuilding process will move forward. We have secured these 2 significant projects, not very big from a financial point of view, which are 2 autonomous vessels from a Norwegian client. Things going well. Early part of next year, those 2 vessels will get delivered. And as we are speaking, ship repair, as I said, there are projects. Mumbai operations has suffered setbacks, even though there has not been a lockdown, but then a significant number of people went through COVID difficulties. Again, travel was a little bit difficult. So Mumbai activities will get ramped up this year. Cochin operations are doing well. So ship repair, we hope to go to some positive figures by end of the financial year. So all in all, looking forward, turnover-wise, we should be well past 3,500 crores coming for next year at the end of the year. I may not be able to give you good feelers on a quarter-to-quarter basis or first quarter, second quarter, that kind of a thing at this stage. As we move forward, we can open up a little bit more on that, because as we are still speaking, the shipyard is not at 100% worker level, but coming Monday onwards, we are sort of getting back to 2-shift operations, and we'll move forward on that. So this is essentially on the physical part and the financial part. I also wanted to paint a picture of where this company should go, in my opinion. I've been again, when I'm interacting with all of you, I've been in the chair for now almost 5 years and 6 months. So after my first term, thanks to the Government of India for reposing faith and giving me an extended term for another 5 years. So what we are trying to do in Cochin Shipyard is a subtle transformation of this company. We have made sure that CSL 5 years back was a single unit company in Cochin with the main yard in Kochi. And as we are speaking today, we are 7 units spread over Kochi, Mumbai, Kolkata, and Port Blair, also in Malpe in Karnataka. We hope all these units over the next 12 to 18 months standalone as functional units, because we have ramped up. People have been positioned. Mumbai will have about more than 200 people working for us in Mumbai. Kolkata, between the 2 units, will have more than 100 people. Port Blair will have about 50 people. So all these recruitment, people positioning, things have been done. And all of this, what we have done, this growth path, both on shipbuilding, ship repair, and the geographical expansion, has been in line with what we are running in Cochin Shipyard called the Cruise 2030, which is a long-term strategic exercise which we have undertaken along with the Boston Consulting Group, who have been with us over the last 2 years. Difficult phase for them also, but we have worked together on various trajectories here. And I'm generally happy that most areas which we have touched upon, things have gone well for us. Positives again emerging. We are very closely talking in Europe. We hope the moment we are free to travel from Europe, we could see some orders coming in. We are expecting. We are extremely hopeful of some orders, especially for what we call the short sea vessel segment in Europe, in West Europe. We have been really pushing for building up the dredger areas in India, dredger manufacturing, and we have been very fortunate in concluding a long-term MOU with Messrs. IHC, which is the world's #1 dredger company from Netherlands. IHC is practically 60 to 70% of the world's dredgers, and they are the #1. It's Royal IHC, more than 100 years of pedigree. So we're extremely happy to have this association with IHC, and it's again even more gratifying that I can convey that it's been decided that Dredging Corporation of India will procure dredgers, and as we move forward, we are in the discussion. So again. No, we're not in a position to confirm anything, but I can confirm that we are in discussion with Dredging Corporation of India along with IHC to build dredgers in Cochin Shipyard. Hopefully, things should be concluded shortly. Significant move for the country and for Cochin Shipyard. Also, we have concluded a major contract under the Make in India and Atmanirbhar Bharat initiative with Messrs. Fincantieri Group of Italy. Fincantieri, as you are probably aware, is the largest group in Europe and among the world's top technology groups. We are teaming up with them, and the particular naval project which we have secured in ship repair, a large project. It's plus 150 crores of turnover on that single project. That project is a vessel where we are teamed up with Fincantieri and will be executed in Cochin Shipyard. So Fincantieri teaming up, IHC teaming up. Yet another very strong teaming up which we have done is with an organization called Robert Allen. Robert Allen is the world's leading #1 by any yardstick tug designer in the world. Robert Allen is a Canadian company, and we are teamed up, especially because there is this new SOP that has been released that as we move forward, practically tugs needed in the country will have to be built in the country, and we feel with this association we should be in pole position there. We are talking to at least 3 entities in India on potential tug orders. We hope things should move forward. COVID restrictions have also played a little bit difficult with the potential clients, but we are talking on this front. Smaller things, the new subsidiary in Tebma Shipyard, we hope to get going within the next couple of months with some small fishing vessel orders and something else which we are talking over there. Hooghly Cochin Shipyard Ltd, we are talking with inland transport companies with potential first orders for the Calcutta yard. So on all fronts we are moving forward, and all of this has been wrapped in the Cruise 2030 long-term initiative. All these revenue segments which we have been talking. Again, we are talking significantly with potential coastal shipping companies in India, including some of the leading cement makers in the country. Again, can't take names here, but then leading cement makers thinking of using the coastal shipping route for transportation of cement, because they are all set up silos and clinkers on in the ports. And for me personally, and very passionately, new area where Cochin Shipyard wants to move forward. As you are all aware, this shipyard is today structured predominantly as shipbuilding division and ship repair division. We have structured a new division in this company which we are calling CSAS, which is Cochin Shipyard Strategic and Advanced Solutions. We have gone through the highest levels here, and we have structured this organization at a minimal level. We have actually done some recruitments also, and again, would not be in a position to discuss specifics, but the thought process is this is going to be the knowledge arm of CSL. We'll look at all newer technology areas, electric mobility. You're aware that CSL today is a leader in electric mobility in the marine space with the Cochin Metro boats and the Norwegian contract, both of which are electric propelled. So electric propulsion, fuel cells and hydrogen operated vessels, solar powered vessels, and various other strategic solutions which would be defense and quasi-defense. These are all things which we are working on. Expectations on how it will move forward. This is entirely different kind of thought process which we are driving, but it's not just come off the cuff. Consistent initiatives over the last 2 years, along with BCG, dovetailed into Cruise 2030 is why we have formed this new division, and we hope to come back to you with success stories and newer things in this division also as we move forward. As you are very clearly appreciating, like the division may not start churning out high levels of revenue right from the start, but we hope that we'll be also lucky to get some critical breaks as we move forward. But SNAS is here to stay as a new division of Cochin Shipyard. So we will be shipbuilding, ship repair, and CSAS as we move forward. And all in all, the leadership in CSL at my level, at my board level, and at the senior management level and the mid-management level feels, yes, we are going through difficult times, extremely difficult times. We have never had something like this. Last January onwards, on and off, COVID, first wave, second wave, difficulties. You plan something, it gets disrupted. But even during these difficulties, I think we have held our morale high, and as we move forward, we hope things will only improve. We are extremely pleased to see this time it's for real. The Make in India and Atmanirbhar Bharat initiatives, we are seeing this for real, and we are very much playing a part here. And as we move forward, I'm sure that I'll have more discussions with you, and we can convey much more details here. And as we move forward, once the COVID difficulties are over and travel restrictions are removed, I welcome many of you to come down to Cochin Shipyard. We'll be happy to show you around what we are doing in this company and the newer infrastructure and facilities which we have created for the country and for the company. So with this, I think I've taken a fair bit of your time, but I thought it was needed to just convey where we are. So thanks a lot for being with us, and we can take questions, and we will try to be as open as possible. But if there are certain things which we are not able to speak because of, you're aware that there are military projects being handled in the company. Yeah, the next generation missile vessel, big contract coming our way. We have still not signed the contract, but we have been declared L1. So that's a extremely positive news for us. So we feel strongly positioned on the order book front as we move forward, because current order book, I didn't touch upon that before we might close. The current order book around a 12,000 crores, and we are just, if you bring in the NGMV, the next generation missile vessels, another about 10,000 crores. So I think the main trunk is intact. We are here to take a few risks which could turn out to be profitable for the company as we move forward. And I think next few years we hope things are looking good for Cochin Shipyard. With this, I hand over to the team, and as I was saying, like whatever possible, we'll try to explain. If possible, we'll explain it straight away. If it's not possible, we'll send in the answers later. And if there are certain things which we have to hold back in the due to not being able to disclose very openly at this stage, kindly pardon us. So thanks a lot for being with us, and over to you. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, very good evening, sir.
Yeah, Sandeep.
Yes, hi. Sir, my first question, firstly, thank you so much for that elaborate update on each and every division of the company and your future growth plans. Firstly, on the annual revenue target, we have pegged at 3,500 crores for FY22, keeping in mind all the current disruptions that have taken place in 1Q. If you could elaborate a little bit more on how much top line you're targeting from each of the different segments, shipbuilding and ship repair, and within shipbuilding, how much will be IAC, non-IAC, and then ship repair, how much will the Cochin Shipyard contribute, and all of these new yards at Mumbai, Kolkata, Denmark, how much of those yards jointly will contribute to ship repair?
Sandeep, I'm not sure whether I can share that kind of a detailed information at this stage, but approximately I can convey where these revenues will come from, and this can go a little bit up. That's what I would think. So from the aircraft carrier, we should be expecting to get about 1,850 crores.
Mm-hmm.
And from other shipbuilding projects, we expect to get another about 970 crores.
Mm-hmm.
And we should be getting 750 to 800 crores from ship repair, from all the places together.
Thank you. The line of Mr. Sandeep got disconnected. We will move to the next question, which is from the line of Mohit Kumar from BM Capital. Please go ahead.
Yes. Good evening, sir. So two questions, sir. Of course, we gave the breakup for the FY22. Can you paint some picture for FY23? And do you think what kind of contribution is likely from the new ASW corvette, the new order in FY23?
FY23. FY23 around 4,000 crores. Around 4,000 crores should be coming in FY23.
So do you think this new order will kick in from FY23, and what kind of contribution will pan out? In a sense, is it possible to give some sense of the
ASW corvette orders are starting to come in even from FY22 onwards, but the new NGMV contract orders will not come in from that point. It will be because we expect to conclude the new contract by end of this calendar year, and then there is a design and engineering phase. So the turnovers for NGMV will kick in only year after that. FY24.
Understood, sir. And so how do you see the number? Do you think the margin will undergo a change going forward for next 2 years, or do you think these margins are sustainable? And on ship repair, do you think if the ship repair will clock the FY20 numbers, given that the situation has more or less normalized now?
See, the margins are basically, like as I said in my initial part, see the aircraft carrier project, the margins have been a bit more on the higher side. Again, you should not read too much into it. So those margins are because probably we have worked significantly in the previous years. That's the way you should look at it, because it's a long project. So the kind of effort which wouldn't be getting converted earlier has actually got converted later. And it's not about physical effort. It would have been probably design and engineering, which we don't recognize for turnover, but its effect was coming in much later. Design and engineering on the aircraft carrier project took almost 6 and odd years. So that those were actually being recovered later. Now, margins, these are all competitive tenders, the ASW and the NGMV. We actually said that the ASW Corvette was an extremely competitive fought contract, and the margins we had conveyed earlier, the margins are actually in single digit levels over there. But the NGMV contract is a little bit better than the ASW Corvette. So I wouldn't want to talk specific project margins, but then we'll get into the double digits, early double digits on the NGMV project.
And the ship, last question.
Ship repair margins should be consistent, and as you said, whether we'll go and clock the record turnovers which we had done 2 years back, I'll have to hold my guns till we get into the next quarter.
Understood, sir. Now, how does the order pipeline, is there a large tender which you are bidding for in FY22, or do you think that will get concluded and where we have a fair chance of winning the bid?
Yeah, we have the order pipeline where we are participating strongly. 2 projects on the Coast Guard and 1 on the Navy, altogether about 4,500 crores of order pipeline. We feel we are actually hopeful, but at least one is out of 4,500, one project is about a 700-ish, the other one is about a 300-400 crore project, and the other one is a slightly larger one. It's about 3,500. That is the kind of spread. So at least one project we should be able to win. That's our take as we move forward. But again, order pipeline, I was also mentioning, other than the Navy, the dredger order pipeline could be fairly big. It could be around 1,000 crores, which we are fairly confident will come our way.
Thank you. May I request Mr. Mohit Kumar to rejoin the queue? We have participants waiting for their turn.
Okay. Just go ahead.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants, please limit your question to 2 per participant. If you have a follow-up question, you may rejoin the queue. The next question is from the line of Parimal Mithani from Credential Investments. Please go ahead.
Hello.
Mr. Mithani, please go ahead. Your line is unmuted.
Can you hear me? Hello?
Yeah. You're coming a little bit less audible, that's all, but we can hear you.
Sir, thanks for the opportunity. I just wanted to know, sir, if you can give me the capex till date which has happened on the international ship repair facility, the new dry dock, the Hooghly and the Tambe till date, and what will be the going ahead, how much will be spending going ahead from now, for the current year?
See, for the current year, we are expecting to spend altogether 330 crores on the capex on the dry dock and the ISRF. And what we have spent till now, is that the question you are asking? Yeah. On both the projects together, we have spent about 1,240 crores.
Okay. And the second question is in terms of your order book, which is there. How likely are we going to any big order from the vessel side, sir, currently?
Pardon, can you repeat that question once again?
You mentioned on the Concall.
Yeah.
On the Concall. you have there's three orders, which is from the Navy and the Coast Guard.
Yeah.
4,500 crores.
Yeah.
Are they on a nomination basis or are they on a competition?
No, these are all tenders. These are all tenders, and these are all expected to be finalized shortly. It is in advanced stages, and what we understand from the system is that all getting finalized fairly shortly.
Okay. And sir, the IFE backlog will get over, right? Basically, in terms of
with this RFP backlog is more or less over, but there's a new one also coming up, which again we'll be participating. This is the next generation OPVs coming up.
This will be for repair or this is for a
Sorry
shipping?
to interrupt.
New building.
Okay. And what is the size of the order, sir? Your ballpark figure?
I can't say. See, that's what I said. The larger project was 3,500 crores, but can't say whether if I get that, well and good. But the other ones are about 700 and 350, 400 crores, that kind of a thing, So at least we have bid strongly against all of this, so we'll have to wait.
Thank you. The next question is from the line of Jonas Bhuta from Phillips Capital. Please go ahead.
Good evening, sir. Thanks for the opportunity and congratulations on achieving these milestones on the IAC. So my first question is on the IAC. We see that even though the ship can start sea trials as early as July, but there is almost a 5,000 crore kind of work to be done yet on the ship. So if you can help us understand whether this entire 5,000 crores will be revenue recognized by the time the ship is commissioned, or you think that the work to be done will be lower than what has been earlier estimated, and hence this entire 5,000 crores would not need to be revenue recognized, given that some of this could also entail some bit of buffer cost. So that's the first question, sir.
Yeah. See, Jonas, this figure which you had mentioned, I'm not talking explicitly on this, but then the figure you talked is about 10 to 15% on the higher side. So that's the remaining that is there on that project, and it is not entirely getting recognized by the time we deliver the vessel. You use the word commissioning. See, delivery of the vessel, then the Navy takes delivery. So delivery is what we said early part of next calendar year. And after delivery, there are some parts which the Navy gets into till they commission the vessel. And even post-commissioning, there are certain things where Cochin Shipyard is getting associated. So there are still revenues that will have to flow from that project post-delivery. And it is actually, that is how the contract is also structured.
So this 4,500 crores will be recognized over a 2 to 3 year period. Is that a fair assumption, sir? And not in just 1.5 years till the ship gets delivered. Hello?
Sorry to interrupt. The line of the management got disconnected. Please stay connected while we reconnect it back.
Sure.
Ladies and gentlemen, thank you for patiently holding the line. The management line is reconnected. Thank you, and over to you, sir.
Yeah, we are here. In fact, we are talking to Mr. Jonas Bhuta from Phillips Capital. That's when the line got disconnected.
Yes. So my follow-up on your response was, I just wanted to understand this 4,500 crores of the outstanding book.
will be executed over a 3-year period and not necessarily over a 1.5-year period when the ship gets delivered to the Navy.
Correct.
Right. Okay. That's helpful. So my second question was, like you rightly said that, the ASW margins that you had earlier guided for, which will be single digit, and you are looking at slightly lower double digit margins on the NGMV. Just wanted to understand, both these projects are, sir, fixed price, and the volatility in raw material is quite immense at the time of the NGMV bid, because you have still not closed the contract. So, you're saying it will get closed only by the year-end calendar. That means that you're still open in terms of your the bids that you've put in, or the rates at which you've put in. So what makes you so confident that the same issue that we had in case of ASW, where the forex cost sort of went up? Makes you believe, so what makes you believe that you will be able to do these double digit, at least a low double digit margin in NGMV, sir?
See, on the NGMB, as you probably are already aware, the foreign exchange is covered because it's under the new DP, and the foreign exchange variation is covered. Now coming to commodity prices and fluctuations, see, on naval projects, the commodity prices, see what happens in the cost of steel. Yes, definitely if the steel price goes up, there is an impact. But at the end of the day, these are not steel heavy, or so the only thing that goes up is steel, a little bit of stainless steel here and there, and some piping. But these are, compared to the size and scale of the project, these are all absolutely minimal. Even in the case of the ASW also, it was, see, the overall steel on the ASW would be about just 200 tons. So even if you take about $200 difference, what is the kind of difference that happens on a vessel. So when you look at the overall cost of the ship, so that commodity pricing is not a great factor. You're right. If it was a bulk carrier, we would have got extremely worried. But commodity pricing is not a very major part. And on the NGMB, the forex we are covered.
Thank you. The next question is from the line of Nikhil from SIMPS. Please go ahead.
Just a minute. I need to take an urgent call here. Can you come? Please, sir. Okay.
Hello. Yeah, I'm Jose, Director of Finance. CMD is attending an urgent call, so you can continue the questions.
Thanks a lot.
Hello. Yeah. I'm Nikhil. Can I continue with my question?
Yeah, please.
Yeah. Sir, my question is that if we look at it like it's a little more long-term in nature. Now, as in previous participant question, MD sir said that this 4,500 crores of IAC order book will get extinguished, and this was also a high margin business. What I want to understand, which means that once this IAC goes off, the rest of the 1,800 crore kind of the order book which we have as of now is a low double digit kind of a margin business. But I would also presume that IAC is taking a much larger infrastructure. So can the rest of the order which we are doing at 400-500 crore, can it be doubled, or can the revenue potential of the rest of the order book or execution period can be faster once IAC goes off, because that much infrastructure can be released? So on an annualized basis, is it like on a normal order book ex IAC, we can continue with a 1,500-2,000 crores of an order execution? Do we have that much infrastructure to sustain, or what kind of maximum potential we can do?
No, that's correct. See, naturally, when the IAC goes off, see, today about 2,000 people are working on the aircraft carrier, and the infrastructure is supporting that. So that's the whole plan. See, when the IAC goes off, see, luckily for us, what was most important for us is to have a good, strong pipeline. That is why the ASW Corvette and the NGMV, even if it comes at a little bit of a tough margin, why we want those projects. See, now there's 8 plus 6, 14 vessels over next 6 to 8 years. What happens is it lends extreme stability to the yard. And when you are doing vessels in series, IAC is a one-off vessel. When you are doing vessels in series, after a few vessels, after the second vessel, this is like it becomes extremely comfortable for the yard to actually move forward on this vessel. So from a margin perspective and from the turnover perspective, yes, the turnovers will definitely, the figures you are saying, 1,500, 1,600 crores, that kind of, we will have to do that and slightly more. That is the intent. And the margins, naturally, you will not get a margins like an IAC anywhere. And we have continuously mentioned this. A kind of EBITDA margins will not be available. But that is the shipbuilding business. The thing is, you'll have to populate your shipbuilding yard much more with more orders, which we feel extremely confident. Not just the naval orders, we expect certain orders to come in from outside also, from other Indian clients also. See, these dredger orders which you're talking will be a pipeline for the company. So those are things which will run in parallel. So at the end of the day, it is execution track record which will be defining the company as we move forward. Margins definitely will not be IAC level. It will come down.
Okay, just one on, as you touched upon the dredging part, this 1,000 crores which you mentioned, is the cost of one dredger or is it a combination of 3 or 4 dredgers? Because in a news article in Business Line, the chairman of Dredging Corporation had mentioned that in India there is not much dredging facility available and the requirement is much large. So I thought with this tie-up which we had, it opens a much larger potential business for Cochin. So if you can just help me understand, is my understanding correct, and what could be the potential size or what is the potential market for dredging in India which is currently not being completely manufactured in India?
See, large dredgers are not manufactured in India, and the large dredging companies in India are the DCI and Adanis at this stage. And all of the dredgers are practically imported, except maybe one in the past, that's all. That's a different type of dredger also. So the dredger market, it's not straight away, it is not that the dredger market or dredge building market can build up straight away, because it's not that, see, a dredger lasts for 25 to 40 years the way you use it. So dredging in all ports in India, so dredging is going to increase, but there is also competition. There are foreigners, foreign dredging companies also working in India. So within India, we expect there will be numbers, but it's not like it won't come in the tens or that kind of a number. It will always, because these are all costly vessels. You know, these are all a single vessel could be anywhere between 50 to $100 million kind of a thing. You know, so you end up talking 2, 3, 4 vessels coming from maybe these players, and maybe at least one new player coming into the field. So this is what will come in. So we are looking at dredging as one of the verticals within our shipbuilding revenue group.
Okay. Just one last thing. I think we were doing dredging earlier. We were manufacturing dredgers earlier, but then we discontinued. Am I correct here? Or?
No, not really. We have just done one small dredger way back in 2000, and that too again was in cooperation with IHC of Netherlands. But otherwise, Cochin Shipyard has not done dredger. In fact, India has not done dredger. There has been just one. It's slightly different type of dredger built by Mazagon Dock about 20 years back in combination with a German Dutch designer. But otherwise, a dredger, the smaller dredgers, extremely small ones, which is like $2 to $3 million kind of thing, those are cutter section dredgers, small river cutter section dredgers and other. Those are made in India with foreign design support.
Okay, I have few more questions. I will come back to you.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisor. Please go ahead.
Good afternoon, sir. Now, who are the main competitors in our industry, and what is our capacity utilization as on today, and are you confident that that will continue in future also?
So the competitors, defense shipbuilding, if you are talking about, I'll have to take the segment. If it's defense shipbuilding, there are the defense PSUs, Mazagon Dock, Goa Shipyard, Garden Ridge Shipbuilders, and Hindustan Shipyard, and Larsen & Toubro Shipbuilding. These are the competitors on the defense side. On the commercial side, it is not really competitor because we are by far the largest from a size and scale point of view. But then there are some able companies like the Chowgle group in Goa. There is Titagar Wagons has got a shipbuilding division in Kolkata, and then there are very small players in the industry. This is on the shipbuilding part. On ship repair, again, the closest competitors would be Larsen & Toubro Shipbuilding, which does a bit of ship repair, especially for the Navy, and Hindustan Shipyard Ltd. Doing ship repairs. Also in the private sector, Chowgle Shipyard, out of the shipyard in Laugat, near Jaigat. And capacity-wise, ship repair, we are there's no absolutely authenticated figure, but we would think we are somewhere around 40 to 45% of organized ship repair happening in the country. And shipbuilding, if you're looking at our turnovers, we are number 2 after Mazagon Dock, and overall maybe India, including the naval shipbuilding, may be doing something around 12 to 15,000 crores in a given year. So we are probably somewhere around 20 to 25% of the Indian shipbuilding capacity.
Oh, thank you.
Thank you. The next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead. Mr. Giriraj Daga, your line is unmuted. Please go ahead with the question.
Hello, is it audible now?
Yeah, please.
Yes, sir.
Yeah. So my first question is, can you give me the breakup of 4,500 crore of IAC order in terms of cost plus and fixed price?
I'm not getting into the exact figures, but then approximately, just a minute, just give me a minute. The fixed part would be about 35%.
Okay.
And the balance is cost plus.
Okay. My another query on the margins. You mentioned that obviously IAC had a higher margin, and this year we had good margin. But should we assume this year margin on IAC to continue for the rest of the orders, or this year particularly we had some component which had a very high margin, and hence the IAC margin will also drop? Is this the right assumption?
Something similar should, because what I was saying is that IAC went through the construction phase, then the testing and commissioning phase. So we are currently in the testing, commissioning, sea trial phase. So the margins generally should be consistent with what we have seen over the past quarter.
So sorry, I'm just this year margins are higher, and the margin should be fair, similar to what we witnessed in say FY18, 19, 20. This is what you want to convey?
Can you repeat that question again? There's a little bit of an echo in when you're talking.
This year we had a very good margin. Despite our revenue getting lower, we had a higher EBIT margin in the EBIT profitability in the shipbuilding segment. I want to understand the IAC margin per se will remain same for the rest of the FY22 and FY23, or will the IAC margin also decline on a like-to-like or apple-to-apple comparison? FY22 IAC margins will be lower than FY21?
So the IAC margin is comparable, but then again, I'm not in a position to give you fine details. That's why I said 35% would come from the fixed part. And there's a margin difference also between the fixed part and cost plus part. You're probably aware of that. So, but it would be consistent from what we have seen in the immediate past.
Okay. My second query on the capex side, you mentioned the 330 crore of capex. But looking at the capex number, will we be able to commission ISRF as per our guidance of December 21?
It looks a little bit difficult as of now because we have also got force majeure claims of delays from the crane makers. Simplex Infrastructure has had difficulties, so we may touch and go. We are still looking at December end of this year, but whether the entire facility can get commissioned, we'll have to see as we move forward. There could be something spilling beyond this also.
Yes. Just a small follow-up. What is the FY23 capex will be? That number should be materially higher. FY23 capex.
Just a minute. We should be around 400 crores.
400 crores. Okay.
Yeah.
So we are targeting FY23 the dry dock also to commission, right?
See, the dry dock, the commissioning, we are now set for 22 December. That's completion of the work, and then there's a big crane which is coming from Korea, which will actually reach here. The commissioning may be a few months beyond that. So yeah, FY23, maybe 23 March, April, we should be able to start exploiting the dock.
Okay. So we had a total capex of about...
Sir, may I request you to please rejoin the queue? We have participants waiting for...
Yeah.
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. Sir, excluding the IAC, we will be having, almost order book of 18,000 crore. I'm including this 10,000 crore of next generation missile. So, what would be the execution period for this 18,000 crore order book?
I may have to draw your attention that this 18,000 crore order book portion, the ASW Corvette and the NGMV are long projects because that is the way the Navy wants it. So this is what, if you're looking at the NGMV, for example, from a contract, the first vessel is to be delivered in 42 months, 48 months, and thereafter one vessel every year. So when we are talking about 6 vessels, you can see it goes into 48 plus 5 years, essentially. So that's altogether 9 years the NGMV will go in. And the ASW Corvette, we are currently in the construction phase. That's also spread over 6 years. Now, so this is not the sole order book which we have, but this is what we have right now. And as we move forward, that's why we'll target to bring in new orders into the company as we move forward. Because for example, if you are looking 5 years down the line, it is not that we have full order book. Because if exactly 5 years from now, we'll have probably 1 or 2 ASW Corvettes remaining and a few NGMV remaining. That is not the order book that will be there at that point of time. We'll actually continuously try to fill this order book position as we move forward.
Okay. And now that once this IAC will be over, so currently, we are doing around 400 crore of shipbuilding other than IAC. Let's say whenever, this NGMV and ASW both together will have a good execution, what kind of peak revenue we can do in shipbuilding?
Somewhere around 1,600, 1,700 crores is what we are from NGMV. And from the ASW Corvette, somewhere around 800 to 1,000. So it should be somewhere around 2,500 crores of shipbuilding turnover. And this was a question sometime back. This is what we'll actually do on the shipbuilding part.
Thank you. The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Yeah. Good afternoon, everyone. I hope I'm audible to you.
Yeah, audible. Thank you. Good afternoon.
Good afternoon, sir. So I just want to kind of clarify, when you are saying that the margins are going to be at low double digits, are you talking at an EBITDA level or at a PAT level for the new orders that you want?
EBITDA level. EBITDA level or PAT level?
Can you repeat that? You're asking the low double digit was PAT or EBITDA? Is this your question?
Yeah, that's the question. At what level are you kind of guiding for the margins for the new shipbuilding orders that you want?
That's at the PAT level.
Okay. The second question which I had was more related to the third division that you intend to form. You have given us some color, but if you could give us some more in terms of the kind of investments that you may want to do in the third business division that you want to create, that would be quite useful, and some thought process on the timeline for this.
Not really in a position to discuss the money part on this division straight away. I thought I should convey to our investors and analysts that we are moving in this direction. See, right now we are looking at certain investment opportunities, that is for sure. But the most important part is we are actually building up people. So the investment currently is in people in that organization. And revenues, there are a few leads being followed, but it's too early days to actually discuss anything on this division.
Got that, sir. I'll get back and give you for more questions.
Sure. Yeah.
Thank you. The next question is from the line of Mitesh Sheth from Vedant Securities. Please go ahead.
Good evening, sir.
Good evening.
Yeah. Sir, as per our internal assessment, when can we complete this International Ship Repair project? Like when, till what date it has been postponed to, sir?
See, we have actually formally postponed it till end of this year, December 2021. But we are sensing some difficulties in the completion, especially the turnkey contractor involved is facing some difficulties. He has not fully recovered back from these COVID difficulties and the financial difficulties. Plus, there are certain equipment which is imported, especially cranes, which may take some more time. So probably maybe next quarter I can give you much better information, but then we are probably getting into mid of next year for the commissioning.
Okay. Sir, sorry to harp on it, but there are in the market, there are really some difficult things we are hearing about the simplex infrastructure also. So is there an alternative, or do you feel that they will be able to complete this thing? And what stage are we?
No, I fully understand. I fully understand what you're asking. See, this is one project where simplex infrastructure has not let gone. They are still working on the ground. I can tell you that. And we have worked very closely with them. We have tried to support them to whatever extent possible. But I can tell you, even if there's a break, we are probably in a position to hold the project because the complete marine part and of the project is already completed. There's the complete equipment part, the cranes and other things, we are holding it directly. And they've gone through difficulties because it's been a steel price increase that hurt them badly on this project. But for us, it was a sort of the escalation clauses, which was normal escalation clauses, are not giving them full comfort on the steel part. But we hope, and we are standing by them, we hope that they will be able to continue. But then work has slowed down. That is our greatest concern. It is not that they stopped and moved forward. Work has slowed down, and since they are facing some difficulties, some of the good people have left. There are the excellent people here. But all in all, since we are facing these difficulties, that's why I'm not able to give you exact dates and other things. But even if something goes wrong with them, we are in a position to take over the work and complete it. But that's definitely not the best method to move forward.
Thank you, sir, for being candid. And I hope by next quarter we get the company itself, Cochin Shipyard itself, is able to get a clear-cut visibility on the project, sir. Thank you very much, sir.
Yeah, sure.
The next question is from the line of Ashok Damani, an individual investor. Please go ahead.
Good afternoon, sir. Congratulations not only on your numbers but your wonderful new initiative. I have a couple of questions.
Yeah, please.
One regarding, you mentioned just now that we will do peak shipbuilding revenue of 2,500 crores.
Correct.
What year would that be in, sir?
Pardon?
What year would that fall under, the 2,500 crore revenue?
Which year will it come?
Yes.
After IAC.
Immediately after IAC.
Immediately after IAC.
Correct. Because we are currently actually the current financial year we will get into sort of good work on the ASW corvette, and next year, that's FY23, ASW corvette will be one of the critical key components in our revenue turnover. And since there are 8 vessels in the ASW corvette, we reach this levels as we move forward along with the other projects which we'll have. And by that time, NGMV will also kick in. So NGMV plus the ASW corvette and certain other shipbuilding projects which we haven't got right now, but as I was saying, the dredger, a few projects which you are talking in Europe, there's a high level of optimism that those will also come in, because we definitely need this mix. We need this mix of naval and the other projects, because our target has always been try to increase the volumes in shipbuilding, because as you are aware, like the infrastructure, the overheads, that more or less remains steady. So if we can actually increase your turnover, which is the figure which we are talking, that is where the profitability will come sustained.
Sure. Thank you. My last question is, sir, you gave projections for FY22 and indigenous aircraft carrier. You're saying the other shipbuilding will be 950 crores, which
Correct.
is almost 2.5 times, and the other ship repair will be 800 crores, which
Correct.
is again a double.
Correct.
How do you see this going forward?
See, shipbuilding should go even more than this, because shipbuilding depends on how much orders we can garner. We should be able to. We are hopeful that we can take this much more forward, because on the shipbuilding side with the ASW and the NGMV coming in after some time, we should be able to take this forward. Ship repair, we actually set some internal targets for us. See, the moment ship repair is a continual flow, and the moment we have some breaks, again just this 1 month break we have seen from May 8th till now is actually pulling us down by at least it's not just 1/12. It will take off a little bit more than that, you know. So ship repair also, where we are this 800-ish level, we expect things should consistently go up 12-15% at least, going up on a yearly basis.
Okay, great. Thank you, sir, and congratulations again.
Yeah, thanks a lot.
Thank you. The next question is from the line of Shweta Jain from ANS Wealth. Please go ahead.
Hi, sir. Thank you for giving this opportunity. Sir, again, I have a follow-up question regarding your peak revenue and order book. So like you mentioned, sir, a peak revenue would be 2,500 crores after the ISC, right? And
Correct.
so I just want to understand, sir, how do you see, when a peak revenue is 2,500, the order book will primarily consist of ASW and next-gen missiles, right? So what kind of peak order book are we looking at in next 2-3 years? Do you think the order book, which is currently 18,000, including ISC and next-gen missile and ASW, can it ever reach to a level like 25,000 or 30,000 crores in the next 3-4 years, sir?
This is and thanks for asking this question. This is our wish list also. But I can tell you, like, see, in shipbuilding and as a company, we always made an order book, which I've always used this word. This is about something like 4 to 5 times your aspirational annual turnover. this is where we want to go. And we will actually bid aggressively for those. Because that is where the company sustains itself. Because the company's overheads are not going down. There's a PSU company. If something is going down, we don't sack our people, we hold our people. So there's a core overhead which we are carrying in this company. So what is very important is, and that is why we'll go on all fronts. That's why I said we go into Europe for short sea shipping, we'll try for dredgers, we'll try for the naval projects, and we'll try for other private contracts also within the country and outside. But at any point of time, the general take is that, for example, when I'm saying when I'm guiding you into a turnover target of around 3,500, 3,600 levels, internally I would have in my mind about 4,000 plus, and I'll multiply it by about, say, 5 times. So that's about 20ish. This is what I need to have now, which touch wood we are having this order now. But next year I need to actually have an order book position of around, say, around this level, slightly more, about 10% more. So about 22, 23 I should have. And this is the continuous challenge for people like us, getting into the market and getting these orders. But the good part is we are sensing positivity. And how we'll be able to convert that positivity, we'll have to work the talk together, but we will try our best to go into these levels.
And so what kind of peak revenue are we targeting for ship repair? Like this 2,500, I believe, is on the shipbuilding side, right?
My Chief General Manager, Ship Repair, Mr. Srijit, is looking at me. He is not giving me good figures, but then see, internally we definitely want to do. There's nothing called a peak. We want to continuously grow on ship repair. So it is not about peak. It is with Mumbai coming in, Kolkata chipping in, Port Blair coming in, and Cochin Shipyard and the new ISRF when it gets commissioned. We want to move forward. So ship repair should be on a continuous growth. But we are guided 1,000, 1,200 in 1 to 2 years to come. That's where we are guided, and I think at this stage that is what I should say. But as we move forward, ship repair should be. It should keep on growing, because we will end up repairing at least around 200, 220 ships in 1 year when these facilities also coming up.
Okay. And so my last question is, so on the new division, the knowledge center, the knowledge arm that we are coming up with.
Yeah.
So if you could throw some light, like you said, you're investing in people. So if you could throw some light as to who is going to be the main person who's going to drive this division, what kind of people are we looking at to hire, and strategically, how are we looking at this division to provide synergies to our ship repair, and what kind of revenue potential can we have because of this synergy and because of this new division coming in, sir?
See, I can give you only a very, very high-level picture here. We have set up this division with one of our key executives who has been with the company for 25 years, strongly involved in defense engineering. He is heading the division along with 2 assistant general managers who have both been with the company for 15 plus years. Then we have got around 6 people with the group right now. But as we move forward, by end of this year, we will have about 20 people within the organization. And the larger thought process is to have this probably as a subsidiary company or an associate company as we move forward, and going to under the Cruise 2030 initiatives, by 2030 getting to at least 1,000 crore company. 1,000 crore division. This is the thought process. But too early days to discuss much more detail, but this is the overall plan here.
Okay. So can I just ask one small follow-up question?
We have the participants waiting for their turn, Ms. Jain.
Okay, I'll join back the queue, no problem.
Thank you. The next question is from the line of Tanmay Diav, an individual investor. Please go ahead.
Hello. Good evening, everyone. My question is that about the dry dock. When when do we expect, and what kind of revenues do we expect from the dry dock?
So the dry dock, as I said, we are looking at completing the dry dock, the civil part in December 22. We are closely working with Larsen & Toubro on this. That the cranes may come in a few months thereafter. So there's around 23 mid. Now the revenues from the dry dock, it would be difficult for me to discuss this at this stage. We have our internal discussions on this, but then till now, like since we haven't taken it through the board in great detail, I'm probably not in a position to share revenue discussions from the dry dock at this stage.
Right, sir. And my question is that this dry dock, the size of the dry dock is similar to the size of the dry dock which we have right now, or it's slightly bigger?
It's much bigger. It's much bigger.
So we can expect on similar lines or slightly higher from it?
Should be again. It could also handle some critical assets of the country if the country decides to do so.
Right.
Like the next aircraft carrier kind of a thing.
Right, sir. Thanks a lot, sir.
Yeah.
Thank you. Next question is from the line of Viraj Mithani from Jupiter Finance. Please go ahead.
Good evening, sir. Congratulations on the outstanding numbers. Am I audible?
Yeah, please go ahead.
Yeah, sir, can you tell us our own cash in the company would be how much as of today?
Can I request Mr. Director of Finance, Mr. Jose, to handle that question?
Yeah, just 1 second. Own cash is around 1,000 crores.
1,000 crores. So my next question is regarding the ship repair business. Is it a seasonal business or a continual business? How do we look? Should we look at a ship repair business? Would be going up and down certain quarters, or be steady over the quarters?
Because we have to take it in an overall 1 year picture. Because the quarter there may be ups and downs, but throughout a year you should see that visibly.
And the other different shipyards are also entering this, like GRSE and others. So do we face competition from them? So they are also talking about a ship repair business. And
yes,
if so,
as of now, only HSL is doing ship repair. GRSE is not a startup.
And so my last question is, going forward, broadly we'll have a net margin of 16 to 18%. Is that correct way to think? A mix of shipbuilding and ship repair?
The ship repair EBIT margin is around 23%.
No, because the broad blended net margin should be around 16 to 18%.
On a PAT basis, around 15 to 16. EBIT wise is around 19 to 20.
And so what will be the growth on the blended basis in both the business if I were to look at, say, for next 3-4 years?
See, we have been guiding around 12% on year.
Okay.
But the last year we could not achieve that, but going forward we will be able to do that.
In the shipbuilding, is it, or the both?
Overall.
Overall, okay. Thank you and all the best. Thank you.
Thank you. Ladies and gentlemen, this was the last question for today. I now hand the conference over to Mr. Madhu Nair, Chairman and Managing Director from Cochin Shipyard Ltd, for closing comments.
Yeah, I'm Jose here, Director of Finance. CM has gone for another urgent meeting with the ministry. So thank you all the investors for joining the call, and we'll catch up with you later. Thank you all.
Thank you. On behalf of Cochin Shipyard Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your line.